Hi, this is Saturday the 14th, and this is the market outlook for SPX for the coming rollover week, quadruple witching, and probably the end of normal trading volumes before some kind of holiday slumber starts reducing activity, and probably we'll see more action early January in about 2 to 3 weeks time. I updated my charts from last week. Last week, if you remember, I explained that there is a chance of a range expansion, and as we progress into the week, it looked like it was more likely going upwards. It still surprised me. I can't say that we were not prepared for it. So this is the picture for the coming week. The range is now shifted upwards with a bullish target around 3200, maybe just above 3200. And as I mentioned last week, on this time frame, this apparent strong resistance, which has for the last 2 to 3 weeks more or less like acted as a pivot, has turned into a pivot level in shorter time frames, which obviously change more quickly. This trading range should be shifted upwards as well, and this is more or less the trading range we are likely to see next week. When the market broke on the upside after FOMC, we've seen market shooting up to 3180, and at some point it even tested 3150 for support, which is also a bullish sign. When the market tested a former resistance for support, it keeps grinding up. So what are we seeing here? I've actually now plotted the channel being expanded. So this is now the midline, and we may see SPX actually bumping somewhere around those levels up to 3200. But more likely this trading range will prevail. The support levels have also been shifted upward. So now the first strong support level is probably going to be between 3100 and 3075, a more significant one on the 3050 area, and we still keep the 2970 just because now it is the strong support in the short term. If we have a look on the 1 hour chart, those levels will appear clearer. Here you can see that the former resistance now is definitely a pivot around 3125, and the market still being bullish in the same channel here. So I would say that we can try and protect those levels. Between 970 is probably the strongest support of all for now, but this is actually pretty strong around 3050, and I would suspect that if this range breaks sometime and on the downside, it will probably be cushioned around 3075 to 3100 first. So it is not exactly a great time for market neutral traders. Of course, our trades are managed quite conservatively, and we don't have to worry too much, but it's not going to be a fantastic month for the January cycle to be closed soon. February entry, we started on a very good opportunity of a vol pop here, so the February trade is doing fine. And the February trade is covered all the way to the 39760, 70. So we should have a fairly easygoing holiday season, which is a good thing. Right, there's not much else to say. The overall tone is bullish congestion up to 3200. There may be some pullback, but the pullback should be limited, and I would be surprised even if we pass the 3125 or the 3075 to 3090 area. Okay, I wish you a great weekend, and as usual, I shall record the weekly recap with more detail on our trades on Monday morning UK time. Bye for now.